Good morning and welcome to another edition of Roadhouse Live. Today is May 17, 2023. We are coming into a fairly green market open. Japan had GDP last night. Numbers came in pretty soundly. We had just a little bit of data. Let's just call it flat. The data coming out, nothing bad, nothing egregious. We did have a slight bump in the 30-year mortgage, bumped up just a hair. And we have Apple red for reasons that I'm still trying to figure out what this big spill was on Apple this morning coming into market open. Earnings again, Target reported, guided down in Q2, basically saying that people ain't buying. Same as some of the other retailers have reported, basically saying the same thing. So we are getting a cool down from as far as consumer spending and the consumer out there buying things, especially bigger ticket items. The Home Depot ER was interesting because it looks as if people are done doing the renovations and their touch-ups and all that kind of stuff and are not really looking to do anything additional at this point. This continues to be the overall theme as far as, the consumer looking at everything going, you know what, things are not all that rosy. Things are not all that great for them. And if you juxtapose that against the rising consumer debt, it becomes a question of how much more do they actually have to spend? How much more do they actually have to engage and get out there and do the things that make America what it is? Because as we all know, the backbone of the American economy is the consumer. With this being said, Bender, I forgot to ask you how your morning was and how you're doing. I forgot. I feel so horrible for not asking off the top of the bat now. So, Bender, how are you, sir?
I'm all right. Thanks for asking. I appreciate it. How are you?
I'm doing well.
Good.
So,
Good.
I'm sitting here looking at this market. To say that the market is resilient would be an absolute understatement. I think we've both traded enough through the years that when we get downgrades and guide downs from companies, the stock price usually goes down. Isn't that usually the way it's been in the past?
I don't know. I mean, sometimes those downgrades.
I'm sorry, not downgrades. Guide downs. Sorry.
Okay, guide downs. Yeah, typically that would. Yeah. You're correct.
When somebody guides down, that means it's going to be less and not as good. So usually it's like the market reacts. Market's not reacting, which means the market is pricing and looking at things right now that are completely different than what, let's just call it, the casual observer, and even a lot of the data crunchers that we know of are looking at. They're like, no, we continue to buy. We will continue to buy. And that's been the story over the last month or so, and really back to October. We will continue to buy over.
Would that lead you to believe that potentially the market has already, at least with what is currently known, the market has already priced it?
That's the only other way to look at it. And it's pricing in and it continues to price in rate cuts. I think that's the other thing. I think the market continues to price in rate cuts by the end of the year. They were pricing in rate cuts, I think, at June at one point. I don't know if those are still on and out there as far as what they're pricing, but there is no question that things are being priced in. Now, what's different is the massive level of divergence between Dow-centric stocks, the Russell, small caps, and tech. That's the divergence. So when you get that type of overall divergence, and we can talk about market breadth, we can talk about all those things that are lacking from this rally, the question then becomes, do these laggards catch up? Or is this just a matter of, hey, we're about to get a little tumble here from mega cap, and does the market spill with it? I don't know. I really don't. I know when I look at flow, I have to be even that much more cautious as far as what I'm looking at, because it's like, as a whole, flow continues to be neutral to relatively bullish. And sometimes, you find yourself in these moments of time to where it's like, you know what? There's puts, there's puts, there's puts, there's puts. Are you seeing puts because you haven't seen any puts for a really long time? And so they're just more prevalent to your eye because it's like, wow, I haven't seen that in a while. Huh, what's that? And so it becomes like, okay, so there's puts, but there's also calls, and a decent amount of calls coming through. I think the main thing is that we do not have a healthy market right now. I think I'm going to go out on a limb and just say it point blank. We do not have a healthy market. The market is not healthy when you have a handful of stocks leading everything. I don't think anybody can say that, no, it's healthy, it's great, it's exactly what we need, it's exactly what the market should be. I don't think anybody can say that with a straight face. The indexes continue to grind higher from the standpoint of the NASDAQ and the S&P. Dow has been wibble wobbling. But what's interesting, Bender, is you start looking at some of the global markets. It's like Japan is like at kabillion-year highs right now. Europe has rebounded extremely well. We're still, a good ways off of our highs. So it becomes a very weird question overall in looking at this. And I think what makes it even that much more difficult is the level of mixed signals and data that we keep on receiving. That's what makes it hard. So if all these things become hard, what's the one thing that, that holds fairly true? And those are the charts. Because data is not good. The narrative is just weird as fuck. So let's get into the thing that in moments like this that actually kind of tell and matter. Let's start talking about them charts. Why don't you show us what you got over there?
Well, why don't you take a look at this 60-minute right here, and I'll let you say it because I'm tired of saying it. Where are we?
We're right in the middle, Bender.
We're right in the middle.
We're right.
It's like Groundhog's Day.
And again, right in the middle. This consolidation continues to be like this, never ending. And that's a 1 hour. So by Friday, maybe your little pennant thingy will be resolved. Maybe midday tomorrow. Maybe. If that's a 1 hour. Maybe.
Yeah, this is a 1 hour. The top of this, this is essentially the start of the month of May, right? This is May 1st, right up here.
Yeah. So I don't know. Yeah, go ahead.
Well, I was just going to say, I mean, this 41.34.25, right? If I, drag that back, you can see that we've just been wibble wobbling back and forth, zigzagging back and forth across this area. It looks like a big arrow almost, right? It's just a little off as far as the center point goes. Perhaps if depending on where you draw that trend line.
Yeah, but there's no doubt that we're just sitting here, just wibble wobbling back and forth, ping ponging, if you will, whatever word you want to use. We ain't going anywhere. Now the NASDAQ on the other side, you can look and be like, okay, well, that's going somewhere. It's been going somewhere. But the question is like, do these other indexes play catch up?
Yeah, I mean, I think what you said about, the market not being necessarily in a healthy state when you have a handful of stocks that are, essentially holding the market up. And I think your question is spot on. Do we see a little rotation and get some of the others start to catch up, or do we see a breakdown in the names that are, keeping us afloat?
I
Only
don't
time
know.
will tell.
Look, honestly, I don't know what the answer to any of it is, because it's like the expectation is that China was gonna, step up and blow it out with their opening, and that's yet to happen. The data's not supporting it. It's like right now it feels like there's just a massive shell game taking place on a daily basis, to where it's like, okay, we're going to rob Peter to pay Paul, and then we're going to sit here and ultimately wind up in the exact same spot at the end of the day.
Yeah.
And I
And
think
that
that,
could be.
and we've all seen it, but it's like, the question is on a daily basis, who are they going to rob and who are they going to pay? Right now, small caps are trash, dude.
Well,
Absolute
maybe
trash.
maybe that's where
But the
we
catch up?
see some of that. Yeah.
Yeah. I don't know. I don't know. I don't see how small caps can thrive with credit conditionings tightening.
Well, yeah, remains to be seen, I suppose. All right. As far as the levels go, not going to go into a ton of detail. We'll make this one quick because it's the same stuff we talked about yesterday. Besides the fact that we have, we took that 41.26, that previous low that we were looking for. We didn't end up taking that. So we're right back into, we're at the upper end of the first 5-minute fair value gap of the week. I'd like to see us kind of hold above this 41.30, ideally, let's say 41.38, but really the line in the sand, which we can see, right around that 41.34.25 level. I think if we find ourselves back below 41.34.25, then we're, looking to test this. These are 15-minute candles, but then we're looking to kind of retest this fair value gap right in here, down to the trend line, say 41.30 down to, I guess it would put us, 41.30. We break below that trend line. Previously, the last couple times we get below it, it pulls back above. I think if we get below it and it starts acting as resistance, that's when we need to really start to consider that this gap still exists down here. Until that happens, as you said this morning, looking not too bad, right? This orange line right here, 41.42.75. When I kind of zoom this out, I think I drew that on a 1 hour. Yeah. There's you can see this volume imbalance in here on the 1 hour. Move that up to the top of this candle. There you go. 41.43. I think that is, near-term resistance. And if it gets above 41.43, the ultimate target is to get above this trend line right here, get above 41.43. Then you'd have the trend line, and then we have that previous new week opening gap, the purple shaded area up in here around 41.50. Obviously, 41.48 has been the devil. We stayed pinned to it for a while. We keep revisiting it. It just kind of like 41.34. Every time we get too far away from 41.48, eventually we go revisit. Or at least that's what we've been doing. And, at this point, I would say above 41.50 or this 41.53 half, that puts us through that previous new week opening gap, clears that 41.48. And, at that point, I think it's got, a chance to go take out some of these swing highs that you have up in here, 41.64 half, 41.68.25, and then up into HellsBells' favorite pink box, 41.72. that's what I got.
So if you again, if we play this game every day, we're sitting here stuck in the middle in this little pennant dealing majigget. The ultimate question is what's next. So where are you leaning in all this? You have to have a lean to where you're looking. It's like, okay, well maybe we pop the upside. It's like, or maybe we just sell back down. It's like where are your eyes in looking at this?
My eyes are currently set higher. So, it is Wednesday. So, take that with a grain of salt. But if we look at the weekly 5-day patterns, I'd like to see the classic Tuesday low, meaning that, the rest of the week is somewhat bullish. This kind of formation pattern here to me, I can look at this and see, something of a reversal right in here. And we swept these previous lows, right? All week, we've been sweeping these lows. Last week, we were, we made new lows and then we took them out, right? The only thing left is this gap. But you can see we have failed to make higher highs here. So all of this is still liquidity that's ripe for the taking. So it's just, waiting for that move that starts to hunt some of these levels. But I think that, we've done a lot of work as far as making a new low and then taking it out. We've done that several times. So it seems like, in looking at this, that the easier, at this point, the easier source of liquidity would be to the upside.
All right, very good. All right, Sonny, what you got for us, bud?
Morning, everyone. All right, on the upgrade side, ABNB, BNTX, IQ, and WIN. So on WIN, Barclays upgrades to overweight from equal weight with a price target of 135. Downgrades, HD, we saw that yesterday, the bad ER. KNX Transportations, there's a mixed flow on it, like they're upgrading the rails, but they're downgrading the trucking companies. NTR, got a couple of upgrades last week, now they're downgrading it. And your favorite Onion, ON is downgraded to a sell from hold. Price target down to 26.
Did they report?
Yes, they did.
Okay.
They did a couple of days ago, I think. And coverage initiated on EVGO. So this one has been getting some little bit of news pieces here and there, some flow. But just keep in mind, they also did an offering the other day. So they're down about 10%. And on the coverage, Kura, Kura. So this one has been a mover lately without flow. I think it commons only, but it has made some nice moves. So definitely something I'll be watching for scalping. On the news side, ServiceNow, ticker NOW, they did a buyback of 1.5 billion shares, or $1.5 billion. So that it was up after hours. SoFi remains a buy at Mizu, as Bear are intellectually off per their statement. Singapore Airlines,
What did you say? Say that again.
SoFi remains a buy at Mizu, as bears are intellectually off, is their statement.
I like that. I like that with intellectually off.
Yeah.
Is that the same thing as calling somebody stupid?
Yeah, dumb, retard, stupid. Yeah, all of them.
Okay, I just want to make sure. If that's
This is a nice way of saying it. So you can
that's
probably
the PC term for calling somebody,
yes, and you can if you can throw that into your show tomorrow, that'll be awesome.
Okay. All right. Very good. Thank you, sir.
So there was a headline about Boeing that Singapore airline canceled 8 737s, but sort of a misleading headline. So they canceled the 737s, but they upgraded the order for the bigger, higher capacity planes for the 787-10s. So didn't see much of a movement on that. Lithium America, LAC, so they got the federal approval to continue the construction at Thacker Pass, which are the large lithium deposits. So another area to keep an eye on. Morgan Stanley says Carvana they view it favorably. So, and they upgraded their rating to equal weight from sell. Space is another one we got to keep an eye on. It could get a short squeeze. They got approval for flight later this year. It has a 24% short interest. If flow comes in, I'll probably play it if I do with commons to not get fucked by options on it. TJX companies had nice flow on it earlier this week. So they had a good quarter. They hiked their full year forecast, which kind of goes against what Target said. So, but Target's a different retailer. TJX more clothing and things like that. So TJX is
well, and it's more of TJ Maxx is more of a secondary market than it is.
Yeah, compared to Target.
Yeah.
Yeah, so I would look for Macy's and things like that. Macy's had some really nice flows the other day. It moved up. It had calls into the 15 and the 16s. Regional banks. So we saw a bunch of puts come in the other day, but the regional banks are doing well. So WAL said their quarterly to date deposit grew by $2 billion, and PACW. So both of them have gapped up about 10%. WAL is actually 12% now. Chinese stickers are down. They gap down. They're holding the gap. Not seeing anything specific, but it could be like you said yesterday. The GDP wasn't good, and data coming out of there, China wasn't good. And the day wouldn't be complete without AI news. We have the AI and the big data expert today. It's being attended by J&J, PepsiCo, Visa. And PepsiCo had a huge dark pool the other day. 193.43, 3.14 million shares, which is 88% of the 30-day average. McDonald's, 294.15, 1.5 million share, which is 61% of the 30-day average. TSM, 85.88, 2.3 million shares, 26% of the 30-day average. Meta had 238.46, 1.12, and Nike had another large dark pool, 116.48, 1.1 million shares, 25% of the 30-day average. And that's all I have.
All right, very good.
That EVGO, I didn't see their offering. It was something I was interested in before because they like super high short interest, but I wonder if that is resolved now.
Let me just check. I'll give you an update.
All right, Stonkington.
What's up? Hello. Big day today.
Hello. You want to share your screen?
Yeah.
There you go.
Share. There we go. Yeah. Get excited, guys. This is a big day, specifically because I can't be here. It's a suit and tie day. I got to go do the jibber jabbering with the senators and the bullshit, which means you guys are probably looking at a trend day because that's apparently how it goes when I have to do this shit. So here we go. This is the last time we had one of these and I couldn't participate. So this is a trend day, Thursday, April 27th, 2023. But Stonkington, how do we figure out that it's a trend day? So this was Larry Williams' lesson. As intraday traders, time is our enemy, basically, because if you're scalping, the market can only move so much in one day, and so we've got to capitalize on those trend days because that's your potential for the biggest move. Now, so if we're thinking about how we would classify or know that this was a trend day, so we've got this triple bottom over here, and then make like a little mini bull flag, and then when we pull back, we could use like a little Mr. T idea. This little candle, you can see if we think of these red candles as a bull who just wanted to get things a little bit cheaper, this pullback does not violate the bodies of any of those candles. And then again here, this other little pullback, we didn't even get to this, this previous pullback. The other one would be, you can see just the strength in all these green candles, bigger than any tiny little red one that they tried to put in. And then here, the only one where you'd be like, oh shit, are we coming back down? They still barely just got to this area right here where we're selling. So if you're just looking at candles, that would be a way you could look at potentially being in a trend day. The other one that I like to use would just be the EMAs. So let's throw these on. This is a green 9 EMA, and you can see we just rode that all day. And yeah, even when we pulled back, we still only barely even touched the 89. So this would be watching for today, because I can't be watching. So I hope you guys get that trend day. Now let's jump into some charts for today. And here's the NQ. And this, I jumped to a 15-minute right off the bat because this one is pretty clear what we've got going on here on a 15-minute. Is looking like one of these guys. That blue box below is a little rising, is a fair value gap on the 15-minute. You can see this candle down to that one. So we'll see if they're going to do this little rising wedge there on the 15-minute. I'd love it if they brought it back up into here for an entry, but we'll see what we get. And then if we zoom out, jump to the 4-hour, bring that up. This is kind of what I'm looking at on longer time frames. If we have to pull back, I'd be looking for this area. And then, we keep rejecting. There's a nice rejection off that trend line from yesterday, but that's kind of what I'm looking at the NQ. It's like we've been talking about it. We have to rotate out of big tech. These earnings have been on fire. So we'll see what we get. But definitely seeing, the 15-minute bearish setup, this longer term bearish setup, just waiting for things to break. So that's on the NQ. Let's take a look at the Russell. Here's the 1 hour. We've got this fair value gap above that we're starting to drift into. So we'll see this candle right here. Mr. T would call a bearish or. So the midpoint is right here. So if we're going to go up, I'd be looking for the reaction to that line. And then if we were going to pull back, Mr. T would call this one a bullish order block because it was a red candle that pulled back. Here's the midpoint of it right there. So if we're going to go down, I'd be looking to see the reaction of that 1745.40. So individual tickers. Starting gave off the dark pools there. Here's Meta with a nice one last night. It was also a daily inside bar. So it's sitting on this dark pool here, 138.46. I don't like to list that as the trigger just because, especially at the open, it's going to be probably bouncing around it. And if you get a bias too quickly, there was that VIX dark pool yesterday. I just like to give them some time to shake out on the open. So if we're going to go up, I'll be looking at the reaction of this 239.50. You can see it's been pretty important. And then below, this is a very conservative put trigger just because I wanted to give it time to bounce around this dark pool. But this 235.70, you can see the reaction to that one as well. So if we're going to pull back, I'm going to be watching for that. I mean, it could, even if we reject this dark pool, we could even just run right to right there. So we'll just kind of see, but that's what I'd be watching on Meta. And then let's check out Apple. Apple again, just because I like watching the NQ, I'd like to keep an eye on Apple. So we've got this kind of little pennant as well, building out. We've got the dark pools above. This is the one we've been talking about all week. There was another one on Apple this week, or last night, I should say, that came in at 172.07. So not too far off from what we've got sitting above. So basically going to be watching right what we're sitting on right now, this 171.40. If we break down and can't hold above, then next, we're looking down into some of these dark pools below, and then above, just be watching for those dark pools there. And that's all I got.
All right, so thank you very, very much. So again, Apple had that little sell off of that 172 level, and now we're down to that 170, 130 level. Still trying to piece together exactly what and why. We've seen a couple of headlines, but they didn't seem sell-ish. So Apple Flow is going to be important. We haven't gotten Microsoft Flow. We didn't get it yesterday because of dividend. So we should get Microsoft, Apple. Those are the main components of the game. Let's see how those react. Tesla price has been interesting off of the shareholder meeting yesterday and and his interview with CNBC, which was one of the better interviews that I've seen with Elon. I thought that the moderator or the interviewer did an exceptional job. So if you haven't had a chance to watch that, I'd go back and watch it just for entertainment purposes, if nothing else. With all that being said, we have 7 minutes until open, 7 minutes until open. We have a decent idea of being stuck in the middle. So when you're stuck in the middle, the question is which way do we go? Which way do we go? And I think Flo's going to do a decent job of telling us which way we go. So we'll see you guys shortly. Hopefully you enjoyed the show. Thank you, Stonkington. Thank you, Sonny. Thank you, Bender. We'll see you soon.
See you in a few.